oftentimes I hear whole life is too expensive, right? Like it just costs more than, well, anyway, let's, you guys speak to it. Who wants to go first?
Yeah, I can go there. So in some ways, it is expensive in some ways. In other ways, I would say it's not quite as expensive as it's cracked up to be. Here's where I think some of the expenses come is really in the first couple of years of this strategy, when you're overfunding, these high cash value whole life policies. In the first couple of years, you're not going to see the full cash value available to you to go out, loan against that and invest right away. So for example, let's go back to you want to put in $100,000 a year. In the first year, you might have, $75,000, $77,000 of cash available to then go invest. So there's opportunity cost because now you don't have access to that $25K that year to go out and invest. So in the early years, if you're saying, I just want to put all my money into a policy and then turn around and go use it, there's going to be some expense in those first 2-3 years of the policy. Now, those expenses, though, are very much overloaded into those first couple of years. So as we continue on in this strategy of building up cash value in these policies, one, the costs are going to go down. But two, you're also going to have the growth in the cash value, the interest that's being paid, the dividends that are being credited. And then when you combine that with the lower costs, yes, the costs continue, but also, let's say you're putting in $100,000 in year 7 and it grows by $140,000 that year. So were there costs? Yes. But really, we ate up a lot of those costs in the early years. Now, the other thing I might add to that is that just whole life in general is going to have a higher cost than a term life, just naturally, right? You're buying insurance that's eventually going to pay.
Let's clarify this though, because I think this is important. It doesn't necessarily have a higher cost. It has a higher premium, right?
Exactly.
And there's a difference between those two because there's a paradigm shift that has to exist. Like there's a value proposition. And the question then becomes, are all expenses bad expenses, right? Or is that expense actually a value proposition? There's some things that I can put money into that are an expense that can be hugely an example might be, let's say that I pay to create a trust to put my assets in and I end up in a lawsuit and it's completely saved. Like, was that an expense or was it a value, right? And so the same thing has to kind of apply inside of this premium world. We have to look at it and differentiate premium versus, really, I guess, premium versus cost or value versus cost.
If I can jump in real quick, that's probably one of the biggest things that we try to help people see, because again, in that example you gave earlier, Blake, the 25 to as a minimum up to 100,000 a year as a max, people often look at that 25,000 like, oh, that's my cost. And in year one, it might be, right? Mm-hmm. But beyond that, even that minimum, even if you only put in the minimum, you're building cash value as a result of that. In other words, whole life is created to build cash value, even at that minimum funded level. So because we are so used to thinking of premium, that word premium, when we pay my health insurance, when I pay my auto insurance, that's a cost. It goes away. Whether I use the benefits of the insurance or not, I'm never going to get that money back. Life insurance, permanent life insurance, is different. It's just, there's nothing else out there that's built like it, because I pay my premium. It's still the same word, but it's building cash value. It's building value inside of the account. So yes, some of it is cost. Again, I'm not saying that there's no cost to it, but premium doesn't equal cost, to Christian's point.